Welcome to Talking About Finance. As usual, half a dozen slides or so. Just some stuff I'm noticing in the markets I thought you might find interesting. Well, we've got the TINA trade. And as you're likely to know, that means there is no alternative. Interesting survey by Bank of America, Merrill Lynch. They talked to professional investors, institutional investors, and people that manage funds on behalf of customers, asked them to assess their risk. And they believe that they're at record highs right now. It's actually pretty interesting that the professionals seem to think they're taking a record amount of risk. We can see it happening with margin debt, and retail investors have discovered margin. I never do margin, and you shouldn't either. It's a very dangerous thing because the leverage works both ways, can magnify profits, but certainly can magnify losses. And we've seen margin debt surge over 60% in the past 10 months. This has only happened historically four other times: 2007, 2000, 1983, and 1972. In three of those cases, we saw a 50% bear market. The other case, the fourth one, led to a year-long correction in the markets. It really doesn't mean that stocks can't continue to go up. We just have to be sensitive or mindful about the risk we're taking. Oh, and speaking of risk, my gosh, this is really fascinating. Off FT, and really interesting, guys, when you start to look at prior bubbles. Look back on the left-hand side, we can see gold back in the 1980s. Then fast forward, we can see the housing crisis or housing bubble. We can actually see the Chinese Shanghai Composite bubble. We can see the dot-com bubble, and my gosh, look at this, Bitcoin. And how they're defining a bubble here for this approach is they're taking the percentage change from the trough. So Bitcoin, of course, we know has been surging. It's very fascinating that many people are concerned about bubbles in Bitcoin. I don't think so. And as I've shared with you guys before, I bought Bitcoin for years, every Friday night for many, many years. Stopped in December 2019, primarily because I had too much in my portfolio. And if you look at the mechanics, if you look at the technology, we know there's a finite supply of Bitcoin. And we also know that institutional adoption is starting to soar, really starting to increase. Institutions presently only own about 4% of outstanding Bitcoin. And if they want to buy more, it's going to drive the prices up. And if corporate treasurers, following Tesla and MicroStrategy and some other companies, if they wish to acquire Bitcoin, it's going to increase the demand as well. So I'm not so sure we're in a bubble. It's an interesting view. But regardless, we know that governments hate Bitcoin. Why? Look at this. The PBOC, the Russian Central Bank, the IRS. We can see the EU's come in, and it's been outlawed. And what they've done there is that they've tried to clamp down on it without outlawing it. But Nigeria completely outlawed it, and India, they're outlawing it, but you've got 6 months, I believe it is, to shed yourself of your Bitcoin and invest in rupees. Really interesting chart here. I did it Friday because I baselined it off the NYSE Bitcoin index. And right now, Bitcoin's trading at about 57,000, so it's even higher up from where we were on Friday. But you can see the various events. And guys, it just seems like yesterday almost, February 2017, was when it finally broke $1,000. Wild stuff, guys. And from February 2017 to December 2017, we saw a huge run up. After that, we entered what we in the community called crypto winter. And now we're starting to see these sharp appreciations in price. Everything is bigger in America, so to speak. And being American, I can confirm this. Curious about this. Americans are really ignorant of debt, it seems, on many, many levels. So is debt America's future? The budget deficits now are $3 trillion, a little bit north of $3 trillion. As recently as 2019, the budget deficits, and I was moaning about them back then, were roughly $1 trillion. And look at this. How can America ever pay this debt back? It's an interesting question. We'll have to see. Just keep an eye on this stuff, though. Regardless, in the States, homes have never been cheaper. Now, what I've got here is I've got mortgage debt service payments as a percentage of disposable personal income off the wonderful Fred site, St. Louis Fred. And we can see that with interest rates are at record lows, house prices are at record highs. There's a little bit more to it than in this picture presents, because a lot of property in the States right now is under mortgage forbearance. In other words, the banks can't foreclose if the loan is non-performing. So what happens when mortgage forbearance ends? What happens when interest rates rise? And the curious thing is, as speaking with some of my friends, I certainly didn't inventory all of them, they're not paying their mortgages off. You'd think people would be paying the mortgage off now. And they're not. And that's really, really not appropriate. We're looking here at the Merrill Lynch Move Index. And this is very fascinating, guys. What we do is we capture option volatility for 1 month options for the 2-year, 5-year, 10-year, 30-year treasuries. And we're starting to get an idea about the probability of interest rate moves. So it's a sort of like a VIX, but for bonds. Very fascinating. The higher this goes, the more likely interest rate change is coming. We know we're roughly at zero right now. The Fed can't really do much. We also know market rates are pushing up. So it's entirely possible that maybe 12 months out, we could start to see the Fed tighten up a little bit. It'll be interesting to see. But that's the Bank of America Merrill Lynch Move Index. And I've given you the ticker symbol there. You can add it to your suite of tools. All right, guys. Thanks very much for your time. Take care.